Okay. So let's get started. So, good morning, good evening, good afternoon. Welcome to the Urban Forex webinars. We do this webinar once every couple weeks to a month, depending on where I am located and what topics we have available. Now, today's topic is a very important topic because it's something we've been looking at for quite some time. A lot of students have been coming to me for this particular question, saying, "Hey, man. I'm having issues with this because I'm getting into trades. However, the trades simply don't work out, and certain times they work out absolutely perfectly. So what is going wrong? How do I filter my system? That seems to be the common question again and again, right? So they keep asking, what should I do? How can I filter my system? Now, first of all, I wanted to take a moment, as every one of you guys are still coming in, walking in. So welcome to the conference room, guys. My name is Navin Prithiani. I'm the mentor and host at urbanforex.com and senior trader at forexwatchers.com. So it is a pleasure to have all of you guys here. Now we're trying something new here today. We're going live directly to you guys right now, and also onto YouTube. I believe Facebook is not streaming live, but we'll get that fixed in the near future. But for now, let's get started. Now, if you don't know how we do things, or if it's your first time in one of these webinars, we like to keep things a little bit interactive. Now, because there's a lot of people in this webinar, a lot of people in this webinar, what we're gonna do is every now and then, as I get into important topics, I'm gonna turn off your chat. Okay, to make sure you can absolutely focus, and then we can turn the chat back on. Elements that you need to know. You're going to walk away from this webinar with three main important things. And just to give you a reminder, towards the end of the webinar, you can also access an example set video that I've set up for you guys. So you will be able to, when the webinar is done, you want to learn a little bit more on everything we talked about. The description is going to be in, the link is going to be in the description below, and you'll be able to go to and watch the examples. Yeah? All right, so now let's get started. Let me turn on my screen sharing, and we can go straight to this. 1 second here. Okay, you should be able to see my screen now. Let me know whenever you guys can see my circle. Okay. All right, so let's have a look at this. So the three main elements we're going to be talking about this whole session. Okay, let's start with element number one. If you're a trader and you do technical analysis, okay, I'm gonna write this down here. If you are a trader and you do technical analysis, the one very important thing that you have to know is technical analysis will not work if there's no momentum. Let me repeat that. Technical analysis will not work if there's no momentum. The market must be alive and moving for any of you guys to do any kind of technical analysis. Support and resistance, supply and demand, Fibonacci, pivot points, you name it. Anything that requires any kind of technical reading skills, you need an active market. So if you want to try doing technical analysis at the close of New York, try that. It won't work. Right? So you need an active, volatile market. So our job as traders is to start by looking for volatility, right? So we want to know where we can apply our technical analysis, right? So step number one is always to be on top of those things, right? Okay, which means find out if there is activity. Find out if there's activity today. Find out if there is activity pending from yesterday. Okay? And if I can spell it right. There we go. Find out if there's activity from yesterday. Now let me zoom in a bit. Whoa, not that much. Okay. Sorry about that. I didn't want to make you guys feel like you guys are in a rave concert. Let me move this here. Okay, here we go. Okay, should be nice and easy to read. So find out if there's activity pending from yesterday. So you want to keep on top of these things. And then we're gonna go into the nitty-gritty stuff, the stuff that you guys want to see. That's why you're here, and we want to go deeper into that. So we're gonna start with situation number one, momentum. Okay, let me write this down. We're gonna go with the next piece, which is momentum. Let me write it here. Momentum. And then finally, our third piece is going to be flow and territories. Okay, so let's go straight directly into step number two, momentum. Momentum. Now, every time you're dealing with a chart, okay, every time you're dealing with a chart, you have to be aware of what's the flow of the power. So let's say you've done your step number one. You've figured out how much of the market is active, how much of it is moving, and you're looking at your chart. If you're a stock, if you're in, like, okay, there's some activity today around the open. So now I know today is a day where I can use my technical analysis. There are certain days you cannot do it, but you know that you can use your technical analysis, right? So now that you're coming in with your technical analysis, you're now looking for your momentum. Okay, so let me show you this on the screen here. Momentum. So if you're looking at this as right here. So let's say the markets were going sideways for a long time, all throughout yesterday, and then today, bam! Activity has started, markets are moving, everything is going hot, and you're like, okay, my job is to take money out of this market, but I need to do it safely and securely, which means I cannot enter the sells as it's going down, right? Rule of thumb, we don't want to be entering sells as it's going down, because then we're chasing the market. And that's pretty bad, because if we sell down here, for us to make any money, the price needs to go at least here for us to make any money to close that, right? So we want to do it a little bit safer than that. So what we're looking for is we're looking for some kind of a pullback to give us a better price. So we're trying to get away from whatever the lowest price where it halts the market, and seeing if we can get a price away from it so we can sell going at least to that area, if not further. Okay, this is what's referred to as a trend pullback. All right, so our whole job is to find out how can we join this brand new activity that has started. Now, here comes the problem. If I keep pointing at the problems to you, you guys will understand better and better and better. So here's the problem. Markets moved. Okay, boom, 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 and drop. Now in this drop, some panic happens in the market. You know, everyone's like, wow, what's going on? Why is it dropping? You know, yada, yada, yada. Then the next phase comes in. Bam. Okay, now your neighbor, Billy and Bob, is telling you, hey man, I've been making money selling the Euro USD. It's been quite great. Do you see my Ferrari parked outside? Yeah, that's where I got all my money from. Now, the third wave comes in, where more and more people get interested in it because they're feeling left out. Okay, which is how the word FOMO comes in, right? Fear of missing out, right? Okay, this is a standard trading terminology that's been thrown around quite a bit, okay, called FOMO, fear of missing out. So as prices go down, and when this thing starts to pull up, now more and more people are interested in selling it, thinking that, well, I didn't catch that one, Billy and Bob caught that one, and now here comes the 95% of the public saying, me too, me too, me too. I want in on this. If I flip this chart upside down, you will understand what happened to Bitcoin. Okay? So as the market starts moving down, it starts struggling, cannot make a lower low, goes up again, tries to come down, and then eventually fades away. Okay, so you're wondering, why did my technical analysis didn't work? I have my support and resistance. I have my Fibonacci 50% ratio. I have a supply and demand guy in there, somewhere in there or in here. Why are my cells not working? So step one solves that issue. Okay, step one, solve that issue. Are you trading in a day that has high activity? Step two, you want to do the momentum to find out, is that activity alive or dying? I'm going to give you a little shortcut, okay? For a lot of our students in our courses, one of the courses called Mastering Price Action course, there is this guy we called Rubberband Man, okay? He is like the hero at Urban Forex, okay? And he has one big eye, apparently. Okay, anyways, this guy, we call him the rubber band man because I want you to imagine as if there is a rubber band around his waist pulling him back, okay? The rubber band's pulling him back and he wants to run forward. So something keeps pulling him back. So when the markets are ranging and then the rubber band man begins, bam, he's running. He runs from here to here. Once he's running, he can run as much as he can with all of his energy, and then he has to take a break. He has to rest. And that rest comes in. And then he begins his running again. And now what he's trying to do is, can I beat my previous record? That's what we are all looking at. Can he beat his previous record? Okay, those are eyeballs. You sick bastards. Don't get any ideas. Those are eyeballs. And we're just watching, can he beat his previous record, right? Once he's able to beat his previous record, we continue watching to the next area and we're judging it now. We're like, okay. So we're watching it, we're like, okay, the first time he ran from here to here. Okay, if I can extract that out, if I can. Can I? Okay, that's the size of the first time. Then he rested. And then after his rest, he ran again. Let's extract that out. And we're like, interesting. His next run was smaller than his first run. Okay, this tells us something about the momentum. It's slowing down. It doesn't mean he's dying. It's slowing down. Rubber band man is coming into some problem. Let me put this back here. Let's continue. So, it's a busy market. London's open, everything's moving. Asia's done its thing, London's done its thing. Now New York is starting to get in, and they're looking at this as, okay, I want to sell too, but I don't want to sell down here. I know the sell started all the way up here long time ago, but I want to get in on this action because it's active, it's up and running, and I need to do my technical analysis. Prices go up to support and resistance. Support and resistance doesn't hold, he goes deeper. Gets up to supply and demand guys area. They're like, okay, well, this guy's gonna hold it. Okay, it's doing all sorts of things to get you into a mode where, oh, okay, there we go. To get you in a mode where saying you need to prepare for your sells, but the sells, what you're looking at, you're understanding that the rubber band man very tired. He was slowing down as is on the way down, but now even his rests, when he's taking a break, his breaks are deeper and deeper and deeper. Now, around this area, you need to be on high alert. Why high alert? Because as when prices come down and they cannot make a lower low, which means he cannot even beat his previous record, there is a high opportunity where the initial wave can start and go up. Okay? Now, remember when I told you guys earlier that how many people hit the sells from the top? Very few. And then a little bit more, and then a lot of people saying, I want this, I want this, I want this, because I saw somebody else do it, so I want it too. Until then, no one is doing the homework or the research or the analysis to be one step ahead of the game. Okay? This is what we like to call, in Urban Forex, we say, you have to anticipate and not participate. So as this whole thing is happening, prices are coming down, the pros are getting ready to do their buys, the buys are going higher, and that rubber band man who was running from here couldn't make a lower low and beat his own record. He rested, and he rested through his own previous record. That means he's out. He's out. Now the buyers are here. Now that the buyers are here, the first thing that happens is all the sellers, all the people who are selling, where's my marker? Yeah. All the people who are selling are like, okay, it's going to go for a sell here. No? Okay, it's going to go for a sell here. Come on, support and resistance. It's going to go for a sell here. Supply and demand. Come on, it's going to go for a sell here. Fibonacci retracement 1.28. Okay, it's going to go for a sell here. All of the stop losses start from here. Stop, 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 stop. The market goes up, pulls back. Pro traders add in size, and here they go. Second wave comes in. Now, the people who were looking at this as a sell, they're like, oh, you know what? It's no longer a sell anymore. I got hit too much on the way down. It's actually a buy. But you know what? I'm a pro. I'm not going to buy it up here. I'm going to wait for my support and resistance and my supply and demands and my Fibonacci's to come down so I can then buy it from there. You see how the illusion of the trade entries are happening so much later in the game that it's causing no place to survive. Okay, how many of you guys here can actually say, yes, I've seen that happen. It's happened to me. It used to happen to me years on end. And I was just sitting there, I'm like, why does my support and resistance work so well sometimes, and then at certain time it doesn't work at all? Unfortunately, this happens all the time in the markets. Now, up until this point, everyone with me so far, understanding momentum, how momentum can shift through the illusion without letting anyone know, and once it's clear and everybody knows it, it's dangerous? Okay. All right, so now you want to always stay on top of what type of market you're in as well. So you're not always stuck thinking, I need to do this as a trend pullback when the market's actually in a range, or I need to trade this like a range when the market's actually trending. You know, that can cause a lot of trouble. Okay, now here's the next stage. So that was now going into step number 3, which is the flow and territories. Okay, not foe, flow. Okay, flow and territories. I won't write out the whole word territory. It will take me forever. I'll just put TER. Okay. All right, so flow and territories. Now, what does that mean? Now, here is a major issue coming in. Let me pull up the data first. A lot of you guys have probably taken the survey, right? Let me see if I can I upload something here? Let me see if I can upload it here. Okay, many of you guys took a survey when I asked you guys, do you think the sells are on? Okay, more than 3,300 of you guys had said, 55% said it is yes, 44% said no. Now notice this thing, there is a huge amount of people coming in here, and one simple question of which way, there's a 50-50 answer almost. Okay, when the only answer is only one will be right. Okay, either the left side is going to be right or the right side. But there's a huge variation. That means the way we look at the markets is so ranged up, even though everyone's knowledge on support and resistance is exactly the same, right? When you know your knowledge on support and resistance and your Fibonacci's and everything, all that knowledge is very similar. You ask one person to the next, they're gonna be off by 5% on each other, right? You ask him, hey, can you draw support and resistance? 9 out of 10 people will draw it approximately the same way. Hey, can you draw supply and demand? 9 out of 10 people will draw it a similar way. They might be wrong, but they'll draw it in a similar way. Hey, can you draw me, an area where you think prices might react from? 9 out of 10 will think about the same way. When you enter a trade, when you ask them, where do you put your stop loss? 9 out of 10 will say, put your stops above your recent high or below your recent low. But when you take it even simpler and saying, which way? The question becomes like a 50-50. Now let me open up the secondary question. The secondary one. How do I get rid of this? Delete? No delete? Okay, delete the whole thing. All right, the next one. Okay, this one, where I asked you guys a secondary question saying, when you look at this chart, which direction are you thinking? You guys took this survey when you registered to come to this webinar, right? And for those of you who are watching this during a recording or you didn't get a chance to do the surveys, you can always register on our website on urbanforex.com, and we do these webinars quite regularly where I challenge you guys to think in a certain way, and then we come into the webinar and we dissect it a little bit more so you can raise your level of understanding a little bit higher every step of the way. Okay, so this particular survey, you guys said, you know, a lot of you guys said it is a sell, and some of you guys said it is a buy. Okay, all right, now let's take a look at some of these situations in terms of flow and territory, and I'm gonna touch base on some of these main topics. So let's say the markets are moving in an uptrend. Markets are moving in an uptrend. Prices start to hold. They start to hold and they start pulling back, pulling back, pulling back. Reaches an area of a strong support and resistance, let's say. Okay? Reaches an area of strong support and resistance. Pulls back, pulls back, pulls back, goes up, goes up, goes up, and then it does this. Bam! Are you a buyer or are you a seller? Okay? Are you a buyer or are you a seller? This is something very important to know. Okay? Now I'm going to share with you guys some of the secrets that I share in the Mastering Price Action course, and I know a lot of these students will tell you this, how important this piece of the lesson is. It is so basic but so important and overlooked by millions of people. Millions of people. So you see this market going up. It started here. It started here, went up this high, pulls back, started here, went up even higher. And since then, no higher high, no higher high, no higher high, no higher high, no higher high. But we never went lower than this either. All of this activity here belongs to him. To make it simplistic, just think of it that way. All that activity belongs to this guy. Okay? Think of him as a very, very strong guy who's holding the market. Unfortunately, he does not want to buy yet. He's waiting for a price that is a bit better. Okay? So as this thing comes lower, many people will think, oh, my support failed, and I can see all these little support and resistance failing as well. This is a seller's market. This guy will come back and say, that's exactly what I wanted. I wanted to do these buys. Thank you very much. And the buys will activate and they will jump straight up, bounce, possibly making a new high after that. This illusion is the number one illusion in the market. Some of you guys can refer to this as complex pullbacks. Some of you guys can refer to this as set one, set two. However you may look at it, this is not taught so easily out there in the public. Okay? Everything is taught up until this point. You buy off of support and resistance right here. Okay? And if it doesn't work and it drops down, then you sell because support didn't hold. So then you keep selling it. When in reality is you don't sell that. That is very, 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 very dangerous. Okay? I don't know if I said very enough times. Okay? So let's take it from the top again. Let me see if I can get your knowledge. What is number one? Okay, let me ask you guys, what is number one? What's step number one that you must be aware of as a technical analysis trader? What is number one? Okay, for those of you guys are saying number one is activity. Okay. Okay. You can say activity, purpose, volume. All right. Okay. I see a lot of you guys saying liquidity, activity. Good. Good. Very good. All right. Number two, you want to do your rubber band man, which is momentum. Okay. I simplified your momentum for you. Just imagine that guy. Okay. He's one man out there taking on the markets on his own. Let's put his hands on his hips. Give him some eyeballs and a cape. All right. He's the hero. Okay, we call him Mr. Rubber Band Man. Okay, as long as you can read Mr. Rubber Band Man, you have an idea of momentum without going over the financial technical jargon of like, oh my god, I can't understand this. Okay, 65% pullback, 22% follow through. It's gonna drive you nuts. Just remember this cartoon. Okay, remember this cartoon. He will take you through. All right, and finally, number 3, as I see all of you guys, territory and flow. Okay, and again, a lot of you guys in here are actually students, and you guys will definitely know why this is extremely important. Territory and flow, you just cannot skip. It is not something to be overlooked. Now, shall we put this all together? Okay, shall we put this all together? Okay, very good. So I saw you guys say flow and territory. Okay, all right. Now let's try to put this all together so I can give you an idea of how you should be thinking, and then we'll go on to the charts. So then we did the first half as theory. We'll do the second half on the charts so you can see it explained. And then in the example set that I'm gonna install input into the video, right? The example set is actually going to go over this on a chart on a live trade, okay? Where I'm gonna show you how I did a live trade using this thing so you can know a little bit better and see this thing not just in theory and practical, but also in action, right? All right, so now let's take a look at this in terms of all three. So let's say the markets were ranging for the last couple of days. Ranging, okay, makes a little bit lower, comes back up, goes a little bit higher, comes back down, nothing, nothing, nothing. And finally today, the markets, let me move this down, the markets rise. Okay, it goes boom. There's some activity, the market goes up, news came out in Asia, or news came out in Japan. In the past, some news came out and it started the movement, breaking some important levels, getting up higher and stuff. Now you know the flow is back on. Why is it back on? Because of this word. It's new. Not many people can take activity when things are new. They can only activate once it's too much, once it's really, really out there. Okay? If someone says, hey, I bought Google, you won't buy Google because it's not interesting. Then tomorrow, the news says, hey, Google went up a little bit. Oh, interesting. Then the third day, another guy will be like, hey, man, I made so much money on Google. And then the fourth day, everyone's like, hey, man, we should buy Google. That's how the market works. It's human psychology, okay? It is not lack of education. It's just human psychology, okay? They like to chase when they see others doing it first, okay? All right, so once that it's new, we're like, okay, great, it's going up. We know the territory is now, he's the guy, he's running up, and anything, as long as, once he starts pulling back, as long as we don't make a higher high, and we don't go below this guy, everything that pulls back belongs to him. Everything that pulls back belongs to him, which means it belongs to the buyer. Okay? He is in control of the market, to the buyer. So if you start getting this, here's a quiz for you guys. Okay? Watch this very carefully. Where's my, okay, let's get rid of this and that. So if you see this coming, the market's coming down, pullback coming down, pullback coming down, pullback coming down, he reaches this area of support and resistance. He reaches 61.8%. He reaches the Fibonacci level as well. And now he's starting to go up. He does all kinds of things that tells you, well, if he goes above this, I'll buy it. If he turns around and he goes above, if he gives me a bat pattern, if he gives me a monkey pattern or a squirrel pattern, I'm going to buy it. And all the buying start, but they fade, they fade, they fade. And then it starts coming down lower and starts crashing on you. Now, what happens is anyone who's involved in the buys, what do you think they're thinking? Their stop loss is below the recent low. Okay. Their entries was based on support and resistance, which is the generic way of doing everything, right? So as prices are coming down aggressively, they're now into panic. They're into panic. They're looking at this like, oh my goodness, maybe, okay, maybe if it stops here, I'll actually buy more. I'll buy more, and the greed kicks in. And then he goes down, he jumps up a little bit, comes down a little bit. Everyone's like, oh, that's it. I told you it's going to be a buy. They buy more and they buy more. And during this process, it crashes down further. And then in this whole process, while a short-term trader might be looking at this as, can you not see this as a lower high, lower low sequence? A lower high, lower low in any textbook in the planet means downtrend. Unfortunately, this downtrend belongs to this guy who's still alive. We haven't made a higher high since. We haven't gone below him since. He is in control of this entire market. Once this thing stops out all these people, orders pile up, and as orders pile up, this thing prepares, and the real buys activate later after the rubber band man. Okay, so this is where your rubber band man comes in handy. So you're understanding the flow of the market. Okay, let me get rid of this face. This face is creepy. All right. Okay, so you're now looking at your pullback as a rubber band man as well. You're seeing rubber band man. He runs from here to here, and you're like, he's very strong. He just started. He's resting just 10%. He's resting a little bit. You're like, oh, the guy's got power. He's on steroids. Then he runs again, almost 100% identical to his previous run. We're like, wow, that guy's pretty strong. But this time he rests a little bit deeper. Okay? And we're like, okay, interesting. Now the places where I told you these guys are looking to do adding more positions to buy. They're thinking it's coming back. Yes, we can hold this for a buy. Or if they get stopped out and it comes back, oh, it was just a probe, or it's a faker. It stopped me out. Let me do the buy. As they do those buys, but our rubber band man to the downside is not done yet. He's still going. He rests quite deep. Now this puts us in an alarm. Why is he resting so much? He runs again. Barely makes a lower low. Okay. Comes right back. And we're like, oh, could he be dying? And now, since he ran his previous record when he started running was here, and now we're going above him, it's like it's over. That little short-term selling that took place is out. This is when this big guy who's brand new, he's like, it's party time. Let's go. And how much are we going to go with this? We scale hard. Go big, large position sizes, and this thing starts to now rise. And the goal of this thing is to make new highs. Goal is to make new highs. Is that starting to make sense? Okay, is it starting to make sense? Because how many of you guys feel you guys get trapped into this area, okay, where it goes lower than the initial support and resistance that was supposed to hold, but then once it goes lower, it's like, oh, I wanted to buy it, and then stop loss here. When it goes back up, you're like, okay, it's back, buy it now, and the buys are not working, stop loss again. And now after 2 or 3 stop losses, you're so burned out emotionally that you are not able to re-enter ever again, knowing that the trade eventually plays out. You're not in the trade. The only thing you have left is, well, I told you it's going to be a buy. I just entered it incorrectly or a little bit too early, but I knew it was a buy. Right? What good is that statement of I knew it was a buy if we can't grab it right? Yeah? But the first thing comes to the story of, is it a buy? Okay? Let's take this further down the line. Now, Mr. Rubber Band Man is on his way. He's running again. He's like, okay, here we go. Okay? We're on our way up. He gets up to here, he slows down, and he starts pulling back. Pulling back. All right, now he's at an SNR area, and he's getting ready. Okay, he might pop down again really quick, just because markets love to do that. Around this area, can you say, should you buy this? Let me ask you that question. Should you buy this? Let me shrink this up so you can see your rubber band man. Should you buy this? Or are you too late in the market? Okay. So if you now look at this, the way to do this is you grab this guy. You grab this guy and you see how my first time my rubber band man ran up. How did he do? But he rested a lot. Look at this big pullback. He rested a lot. Okay, fair enough, right? Give me 1 second here. Let me check something on my end. Okay, just one moment, guys. Okay. Sorry about that. I think it should be a little bit more clear. You'll be able to see my mouse as well. I think my mouse was not active. So sorry about that. Again, it's our first time going live with this, so we'll make sure things are a little bit smoother next time around. So anyways, so you take the first part out and you're like, okay, he went up that much. Then the next part that he starts running up, you're like, okay, let's take him. And then this phase here, this part here, if you can see it on my screen, the next part is that big. It looks just as healthy. And even after that, his rest after that is low. His rest is not that high, is not that much. It's like 20%, 30% compared to his next run. So it's a yes, you can do that buy. Now, here's the thing, momentum, okay? This is very important. I want you to be very focused right now. This is the moment where you need to focus, okay? All right, this is the moment where you need to focus. Up until this point, you do your buys the first time around, you make your money. You're gonna prepare for your buys your next time around, and you're going for the buy and it's doing this. Like, yeah, I'm making money, but what is wrong with my rubber band man? Come on, bro. What's going on? What are you doing? Why are you so slow? When you start noticing that, and then as you're starting to exit your positions because he's slowing down, rubber band man, and he starts doing this, you're like, okay, I'm going to get out. So I made money from around here to here. Now the problem is he comes down and you're looking at him like, oh God, hey, look at him resting. He's coming down, resting really, really hard. Here's what happens. Another support and resistance is getting ready. Do you buy this one now? Do you buy this one now? So that's the main question I want to ask you guys. With everything I've taught you so far, this happens in the market time and time again. Again, I'm going to share this in the example set that's going to be, the example set is going to be after this webinar. You'll have the link below this video. You'll be able to see it. And then when you click on it, you'll get to the video, and then I'll show you again on a live trade itself, right? All right, so all of you guys are saying, no, you don't want to buy that now because it's now dying, right? The momentum is dying. This is when you need to know all that movement that started earlier, okay, that high volatility, high volume, high activity. Yes, that is correct. It's over. It's over. Because now anyone who's on the sidelines, who's been watching, and he turns on the news will say, guys, have you guys looked at the Euro USD today? He's jumped up 4 basis points. Everyone's going crazy about it. What do you have to say, Goldman Sachs? Oh, okay, well, I think the buys can do well. But then it shows up on the news, and that's what grabs people's attention, which means they now come into this pair and they start doing something, whether a buy or a sell, but they start getting active. Does that make sense? They start getting active in this area, and that's the area where anyone who's been buying from the beginning and holding and scaling and everything, you're looking to take profits and scale out. That's where you're looking to get out of your position. Okay? Does that make sense? Does everyone understand this entire process? Does everyone understand this entire process? Right? So I wanted to go through this whole thing so I can make sure you guys really, really grasp this thing from the bone and really, really get the flow of this rubber band man with territories. Now, let's jump on to the charts right now. Okay? So let's jump onto the charts. So let's have a look at this. Okay, I'm going to maximize this Euro USD 15 minutes. Current market situation. I'm going to zoom in a little bit. Okay. Now look very carefully. Okay, look very carefully. Markets were in a trending state. Trending. Rubber band man's like, hey, I started from here. I got this. I rested a little bit. I got this even more. I got my Red Bulls. I got my steroids. I got this. Don't worry. I rested a little bit. Fantastic. He comes down, but now he's choppy. He's choppy. It's like, okay. So you have to start thinking, whoever sold from up there, they've got to book their money. They got to book their money, which makes prices jump. It makes prices jump. So let the prices jump. But for us, all we know is, wait a minute. Interesting. Interesting. Weird, but he still got it. He still got it. Really strange guy, but he still got it. Now, let the big boys book their profits. What that means is, your rubber band man started from here. He ran all the way down to here and he stopped. Let's put a line where he stopped. Put a line in the sand saying, bam, that's it. Since then, he never made a lower low. But we never took him out either. He's just doing a prolonged rest. As prices comes up to these areas, and like people are thinking, okay, should I get ready to sell? Okay, my sells are working. Good. Bam, jumps right back up, stops people out. Okay, maybe it's a sell from here, support and resistance. Well, that doesn't work. Jumps up again. Well, it's a supply and demand from here. Oh, that one probes higher. That one doesn't work. Okay. Up until this point, the whole scenario is telling you the rubber band man is not dead yet. He's still around. He's holding grounds, that territory. He's still holding it. So what we do, we're like, okay, now that we know anyone who sold this is now panicking because they're stopped out, their stop loss was here, and the faster this thing goes higher, the more people will jump onto the buys, right? And we're like, good, jump onto the buys. Do that. So no one buys down here because they're thinking it's a sell. More people buy here because now they're thinking, maybe it is going up. And more people want to buy from here. They're thinking, oh, that's a pullback SNR, let's buy it. You cannot buy that. That area right here where you're trying to buy it is still in his control. This guy is like, I'm still here. And he's got that big grin on his face saying, I'm tired, but I'm still here. Okay? I'm sorry, I use weird cartoons to explain all my techniques, but I hope you get the idea. So he's like, I'm still here. And in this process, you're reading the rubber band man now very carefully. You're like, all right, let's see what you got, Mr. Rubber Band Man. You're buying. You're pulling back. You're buying. Can't do it. You're pulling back. You're buying. Can't do it. What's going on, Mr. Rubber Band Man? Are you getting ready to die? And he takes him out. He takes him out right here. And he's like, can't do it, man. Complete reversal. Unfortunately, I can't do it. I'm going on the other end for you. Now is when the sells can truly activate. Okay? Because the buyers aren't going to disturb it anymore. The sellers are clear after taking all the orders from the sellers. It's telling you, I'm still alive. Don't give up on me. And as you're preparing for a massive drop. And the goal is, as we discussed earlier, the goal is to make a new low from the rubber band man's previous record. Okay? All right. I see some of you guys saying your drawings look like psychotic hallucination. Yeah, sorry about that. But, the goal for me here is whatever makes you learn and gets the information into your head. If I sit here telling you, when you get a 20% retracement, and then a 5% pullback, and a 61.8% Fibonacci. Dude, you're gonna fall asleep. I am here to teach you the inner works of how trading works without putting you to sleep and then saying it's your fault you fell asleep. No, we can do better, right? As traders, our job is to always do better, and I bring that same attitude to teaching. We can always do better to make sure you're up and running to understand. So now when this market has moved down, Rubber Band Man is well and alive. And he's like, I'm here. Momentum is active. New York is about to open. We have some activity, yada, yada, yada. So stage one, check. We're like, okay, welcome back stage one. And we now go into stage two. Okay, so certain things to check up on these things. So a couple things I like to personally do. I like to look at the Forex Factory calendar, FX Street calendar. So let me take a look at the Forex Factory calendar. So if I go into, for example, today, I see the next news is at 9 p.m. But earlier there was news at 7:30, right? At my time, and my time right now is 7:51. So 20 minutes ago, there was some news that happened in the market. That news, what did it do? I'm interested not in why, I'm interested in what did it do. So at that time, we had some activities in this area, right? This is 20 minutes ago. Where is that? Right around here. Let's just pop in the volume a bit just to get an idea. Okay, so we have some activity coming in. And notice one thing. I'm gonna ask you guys a simple question. What time does New York open? Let me scroll down. Let me scroll down. Let me scroll down. New York, according to this, opened already an hour ago. An hour ago. Okay? Which means, and 52 minutes ago, New York has already opened. According to the Forex industry, they tell you the markets are already open and active. There's a news coming out immediately within 15, 20, 30 minutes coming out. All newses, even like NFP, right? They come out around 8:30 in the morning, New York time. Now, here's the thing. The New York Stock Exchange is not open yet. The New York Stock Exchange is not open yet. Some of the largest corporations in the world are not trading yet. Okay? You have to realize this information. New York Stock Exchange opens at 9:30 a.m., which means for another 30 minutes, it's silent. Okay? It's silent. They're not around trading. They're not around trying to do anything. Does that make sense? Okay? Does that make sense? Let's have a look what you guys are saying. Okay. All right. So when you notice this information about, okay, well, if I know New York is open according to Forex market, I need to know the big boys are not really around yet. Okay, the big boys are not really around yet. When the big boys actually come around, that's when they start. When you can start making use of the information that you've seen at pre-market open activity, rubber band man, territory. You get all of this prepared, and then you're sitting there. You're saying, okay, guys. Today we make money, period. Okay, you don't come into a day that looks like this and it's like, I hope I'm gonna get a trade out of it. There's nothing happening, there's no volume, markets are not open, but you know, Forex is a 24-hour market. No, I don't know why we've painted this illusion on YouTube that Forex is so easy that all you gotta do is put on your socks, put on your big boy pants, and then living on a yacht. Right? All right, take it from the brown guy. Everything that we do here is, you guys take time out of your day to be here. I take time out of my day to be here. Let's quit the nonsense and go straight to the point instead of just beating around the bush in circles. Learn something, master it during the webinar, and apply it since day one. You know, that's the whole goal. That's why, unfortunately, I have to use cartoons. Mr. Rubber Band Man. Okay, so promise me starting today, 1, you are not going to trade if there is no activity. Okay, promise me that. Okay, as technical analysis traders, you cannot trade without activity. 2, okay, number 2, you will read your Rubber Band Man as if he's your best friend. Okay, as if he's your best friend, because he will help you. Judging your best friend will help you. It will help you. Okay? And finally, step number 3, know who's in control of the market. Know who's in control of the market. I haven't even gone into much detail, but I'm going problems. Many people are having problems, and I really hope that you can take this and turn it upside down and be like, I got it. I think I know what he's talking about. I'm gonna go and test it. I can see what he's talking about. All right, so I want you guys to really, focus on everything we talked about, and don't forget, we have the example set that I've put down below this video. You will have it in the example set, so you guys can click on the link below, and make sure to subscribe. If you're watching this on YouTube, make sure to subscribe, comment, like. I look forward to seeing you guys again. I really want to take a moment and really say thank you guys for coming in. I really appreciate you taking time out to be here. And as always, if you're taking time off to be here, I will make sure your time is not wasted, and we make sure to take you to at least one more level higher. Thanks guys. My name's Navin Prithyani. Until next time. Cheers. Bye for now.